going over some volume price analysis. That's going to be Michael, and I'm going to be going over some breakouts. Okay. Is everyone ready to start? Yeah? Okay, hold on. Let me get my price breakouts. Before we start, we need to make sure that when we go over price breakouts, you need to remember support and resistance lines, because breakouts rely heavily on support and resistance lines. So if you don't really understand those, then you can't understand breakouts. So generally, a price breakout is when a price breaks above the resistance line or it breaks below the support line. In this case, you can see that this is the resistance line, and here is the breakout where the price goes above the resistance line. And generally, or not generally, sometimes when this happens, the resistance line here now becomes a support line, so it can continue to bounce up like that. Vice versa for the other, for the breaking of the support line. If it breaks that, then it becomes the new resistance line. Okay, so breakouts happen after what's called consolidation. Consolidation is basically just when a price bounces between two lines, support and resistance. These are all the different potential kinds of consolidation. We won't go into depth about that because it's not really it's not relevant right now. The consolidation that happens, it continues to bounce between lines, is because the strength of the buyers and the sellers are equal. So they stay in the similar range. So why does a breakout happen after consolidation? Can anyone here tell me what a stop loss is? We learned it in week 2. Lucas?
No. I think it's when the stock automatically sells when it drops below a certain price.
Okay, yeah, that's good. Okay. Stop losses can also be on. So in this case, this is the stop loss, and this is the support, and this is the resistance. So you can see here, there's consolidation between the price, and then here is where the breakout happens, and it goes past the support line. When this happens, a lot of people who trade and stuff, they have a stop loss, which automatically sells the stop if the price becomes too low, because they want to minimize their losses. Same for stop losses can also happen if there's a breakout above the resistance line, but in this case, it's below the support line. So when this occurs, when a small breakout happens and it reaches their stop loss, it causes a lot of people to sell their stock because the stop loss automatically sells it. And because of this, it motivates more sellers to sell their stock, and it can also motivate people to short. So this continues, all of that builds and continues driving the momentum downwards. So when that happens, it just causes the breakout to be successful, and it goes all the way down because more and more people do it. They fall.
Question. Could you explain a stop loss at a resistance level instead of a support level?
Okay, stop loss at resistance level. So what people tend to do is when the price is really high, or sometimes it would just be when they buy it, right? It automatically buys and sells instead of sells.
Well, it's if you're shorting the stock, right, and it rises too high, you don't want to lose much money, right?
Yeah. So.
Yeah.
Okay. What he said. So stop loss, if it's up here, and if you are planning to shorting, everyone remembers what shorting is? Yeah. Okay. If you want to short, you basically want to buy it at a lower price. So if it goes too high, then it'll automatically go. Okay. Let me erase this. Wait, oops. Okay, 3 possibilities of a breakout. Give me a sec. possibility here is when the price continues upwards. The second is called a retest, where it bounces back but it goes up again. And the last one is called a fake breakout, or in short, a fake out. So this just shows like breakouts, like even though I know that breakouts do have a high success rate, but only if you know how to analyze them and use them. They're not always accurate because, as you can see here, sometimes they go back down and the price, like, you kind of lose money if that happens, so you need to know how to use it properly. Like any aspect of stocks, this won't guarantee you money, and you shouldn't heavily rely on solely this, which is why you would incorporate the analysis of candles and different indicators as well. Common mistakes. Like I just said, breakouts do not always ensure a trend, so you should not immediately buy or sell after a breakout. So you can see here that this part is the support, this part is the resistance and this part is the support, and you see a small breakout here. A common mistake would be people buying the stock here thinking that the stock will grow and then they can further sell high. But as you can see here, what could happen is that it goes back down and then you end up losing a lot of money. So you need to be careful of that. Whoops. Okay, wait. How to avoid these common mistakes? What you can do is you can also look for a big candle. This indicates momentum and indecision. Like here, there's a big candle, and here you can see there's a large candle. And you can use volume indicators, which Michael will go into now. Okay.
Okay, so a few weeks ago, we learned about the volume indicator. In short, the volume indicator is the indicator. It's a chart that shows the amount of shares being traded, which means bought and sold. You can see these vertical blue lines on the screen, and each vertical line represents one candle, right? So like this long bar represents one candle. So this is the amount that was traded in this one candle. So while we went over what the volume was, we didn't really go over how it was used. So today we're going to be going over that. So there's three main parts of volume. Three things you need to know what volume shows. First of all, it shows buying and selling interest. Next, it shows trend direction. And lastly, if you see high volume, it's usually a sustainable move. So it shows buying and selling interest, right? If we had like two identical candles, both looking exactly the same, right? I'm just gonna put the volume indicator down here. So if we had like one candle with just a little bit of volume versus a candle with a lot of volume, could anyone figure out the reason and tell me why one is better than the other? Okay, then I'll go ahead and explain it, okay? So in volume, right, this shows, these two bars shows the amount of shares being traded. If there were only this small number of shares being traded and the price would rise, it just means not too many people are buying or selling. So I'm just gonna enlarge these bars so it's easier to see. Okay, so I'm gonna break up the volume into two parts, buying and selling. Since the price rose in this period, there were more buyers. Yeah, it's really small, I apologize. But I'm just gonna put the selling as red, right? The selling volume in this candle. Buying volume would be blue. You would see not too many buyers, right? This one, price rose the same amount, but with larger volume. The ratio of buyers to sellers is still the same. But since the overall volume is bigger, you would have a lot more buyers. This kind of just shows the trend direction. It shows the buying and selling interest. A lot more buyers compared to before. Typically, when you have more people, it's kind of like chain reaction, right? price is more likely to keep heading up. So let's say you had two doji candles, right? Exactly identical candles. One with just a tiny bit of volume, and then another one with more volume, right? So the price opened and closed the same, number of buyers and sellers is the same. Half of this is sellers, and then the other half, the empty part, is buyers. Same thing with this, right? Sellers and buyers. If you had this doji candle, you would see a lot more controversy between the buyers and sellers, right? People they have mixed feelings on which way the stock's gonna go. If you only see like, say, 20 people arguing with each other, versus if you say like, you see 200 people arguing with each other, you could say like, this one's a lot more controversial, right? Spurs more debate. And then it shows to a further extent that the price is indecisive. So that's how the volume indicator shows buying and selling interest. So next, volume, the second thing that volume shows trend direction. So I'm gonna go ahead and take a little bit of time to draw a setup as well as a volume indicator. Let's say you had a price up here, right? And then suddenly you see the price start dropping more. You see the price dropping. And then you see it start flattening out, right? Doji candles, kind of like that. So here's the volume indicator on the bottom, right? Remember a few weeks ago how we showed that larger candles meant more momentum, smaller candles with longer wicks show less of momentum, or it's losing momentum. So this one, see momentum is to the downside, right? And then you see it start forming indecision, starts losing momentum. But just by the price itself, you can infer that the stock would start to continue upwards. But if let's say, hypothetical setup, your volume, instead of drawing bars, I'm gonna draw a line. It's probably easier to see. Let's say your volume was kind of like that, okay? Let's say this is what your volume looked like. At the beginning, through your average amount of buyers and sellers, or average volume, right? You see when the price starts dropping, the volume was, I'm just gonna dot this right here, right? You see the volume was actually relatively low. And then in the end, when the stock starts flattening out, you see that the volume is relatively higher. So let's represent this in terms of buyers and sellers, right? In this one, price is dropping, more sellers. The color of the part with sellers red, okay? This is all red up here. And then we're gonna go ahead, the side where it's flattening out, buyers and sellers around the same. So I'm just gonna make it around halfway of the chart. So the blank area in the volume indicator would just be the buyers. So if you see in the middle right here, or when it was dropping, not too many people. Remember in the last slide, shows trend direction. You don't have too much volume going down, probably not a very strong trend. You see the price start flattening out. You see more people. You infer half of them are sellers, half are buyers. Then you could infer that since there's a lot more interest in the stock and the stock is losing momentum to the downside, eventually it will make a recovery up. Does anyone have any questions? So that's the second thing that volume shows. And lastly, we'll be going over how high volume means a sustainable move. So earlier in the meeting, we talked about breakouts, where price breaks a support or resistance level either to the upside or downside. I'm gonna go ahead and draw a breakout right here, right? Let's say this was the price. The two parallel lines is the resistance level and the support level. The line zigzagging in between would be the price. You see right here, breakout, retest, resumption. Clear breakout, right? However, in a breakout, you would always need a volume indicator for it to be accurate. Without a volume indicator, breakouts could be 50-50, you could lose money half the time. So let's say volume kind of looked like this, right? It was flat. And then let's say volume kind of looked like that. Okay. Could anyone tell me what this volume indicator means in corresponding with the price? Yes.
Growing interest in the stock.
Yes, growing interest, right? You see this big volume spike lined up with the breakout. You see the big volume spike lined up with the breakout, right? First of all, if on the past two slides we showed that volume shows buying and selling interest. A lot more people trading it. Price was suddenly able to break, right? Then you would infer that most of these people are looking to buy this stock to ride it to the upside. Versus if you had like same amount of volume all the way throughout, right? This move probably isn't sustainable. It would go up, it would drop back down. Because there was no extra interest in this move, right? Interest in the stock was still the same. No extra interest. People don't really see much of that breakout. Does anyone have any questions? Okay, so I think that's it for our lesson. So for our club, we're hosting a stock analysis competition in like 3 meetings on December 1st. We want you to analyze the stock and not the company, okay? So don't come up here and give me reasons why like Apple has good products. Tell me about their stock. Tell me about their, say, you can analyze it fundamentally or technically, right? In terms of fundamentals, you can analyze it like using, say, income sheets, PE ratios, all of the value stuff. For technical analysis, feel free to use everything we taught so far in the club, plus anything else you may know. Support resistance, indicators, volume, candles, technical analysis, okay? So, the officers and myself will be grading the submissions. So the most accurate, no, it cuts out if you, yeah. So the most accurate and convincing analysis to me will receive a box of donuts at the meeting. But prizes will also be awarded for participation and effort. I'll plan more and give you guys more info in the next meeting, but just look out for that. If you guys want to participate, start studying. So that's all I had planned. Oh, yeah, that's all I had planned for the lesson. We're just gonna go ahead and tally up the results from our activity.
Alright, first for value chips, what type of stock usually has a higher price to earning ratio? PE ratio.
Technology.
Oh no, I meant like growth or value.
Zero multiples.
50-50.
Yeah, it's like 50-50.
You can see the question again?
What type of stock usually has a higher price to earning ratio?
Okay, so so remember a few weeks ago we went over something called the price to earnings ratio, right? Shows the price of the stock in regards to how many earnings per share it has. So a growth stock, typically the stock is more overvalued just because it grows a lot faster. The stock itself, the price of the stock is growing a lot, but the company isn't growing as much. Versus a value stock, been there for a while. The company earns a decent amount of money, but the price of the share isn't crazy high. So with that being said, could anyone? Oh, okay. So we're already putting up the board. Okay. So typically, growth stocks have a higher price to earnings ratio, and value stocks have a lower one. Growth stocks, this one's more hype. The price of the stocks grows faster than the company. Value stocks, the company's been there for a while, it earns a lot, the price could be undervalued.
Alright, second question. Generally speaking, which one has a higher dividend yield? So like your pay.
Value stock?
You're right, yeah.
I'm just guessing.
And then since there's like 17 of you guys, I surveyed 16 of you guys today. Out of the 16 of you guys, 13 of you guys preferred growth stocks, and the 3 of you guys preferred value stocks. So it's quite a big difference. And like over the course of this year, you guys, your opinion on growth and value stocks might change based on like how much you learned about it.
Are you the same picture?
Nah, the arrow's pointing different directions.
We're gonna ask you any questions, John.
Yep, and that's the end of our meeting.
Okay. So thank you guys for attending our meeting. If you guys missed any previous lectures, we have like 2 posted so far on our YouTube. Feel free to search it. It's at the bottom. If you haven't signed in at the beginning, please come see Terry up here to sign out. Thank you guys for attending. That's it.
Bye.